Did you get blown away on your way over?
Tried.
Yeah, a little bit.
Yep.
It's windy today.
Down the interstate, it was a little windy.
Yeah, where did you come from?
Gladwin.
Gladwin? Okay. How about you?
Originally I come from Rosebush, but I had to go to St. Louis.
So that's where you're coming from just now?
Yeah.
Yeah. How about you guys? Where did you have to drive from?
Wademan.
Wademan?
Yes,
I've been all over towns,
Uh-huh.
Lot of friends and
Yeah.
stuff like that.
What did you say?
I've been all over the place today.
All over the place today? Oh.
Yeah, John, I think is John was here last week, wasn't he? All right.
All right, I think we can get started.
Okay. You're welcome, Tony. Good to see you.
Welcome everyone to session 7 of our Money Smart for Business Startup class. Tonight we're going to be talking about credit reporting for small business, and we're joined by Jenny Hoyle from Isabella Community Credit Union. She's the Chief Operations Officer, and she's joined with Andrea. She's going to be fielding some questions for you. So, as usual, if you have any questions, feel free to raise your hand, make this an interactive class, and learn a lot. Thank you.
Do you have a card? Right off the bat.
Absolutely. That one's easy. Here you go.
Thank you.
Certainly.
Is
All
that
right.
an account there?
Well, thank you for coming tonight, everyone. And we're here this evening to talk about credit reporting for small businesses. And I understand that you as an audience are thinking about starting a business, or you're on your way, or you have, or you're at the early stages. How many of you have already started something? Okay, so, and then the others are just thinking about it?
I bought a commercial property. I don't know what I'm putting in there yet.
Okay.
So right now I have a warehouse.
All right. So we're going to take a minute and just kind of do some introductions. We'll talk about what we're going to talk about tonight. I'll tell you a little bit about me. I'd like to learn a little bit about you and what you want to get out of tonight's session. Okay. And I might sneak in some stuff about Andrea too. All right. All right. This worked a second ago. So there we go.
Can't point in the right direction.
Apparently I do. Mine works all over the room, my one at the office, so I'm used to walking around with it anywhere, and I don't have to point it anywhere in particular. Usually it just picks it up. But yeah, so tonight we are going to learn how credit reporting impacts small businesses and how you can utilize it to help build your business and make it stronger, and to build your opportunities for the future of your business, because it's an integral part, and you're going to see that as we go through our discussion this evening. And as far as ground rules go, mostly it's just, if you do have questions and things, let's have a conversation, or if you have an expertise in an area, or you've already experienced something in regard to what we're speaking about, feel free to share, because you'll probably benefit the whole room, all right? So, so as Tia mentioned, my name is Jenny Hoyle. I do serve as the Chief Operations Officer of Isabella Community Credit Union. And I've been there almost 30 years now. So I know I look way too young. I started when I was 12. But Andrea and I were just talking, I need to start lowering that age now, because it's just getting a little bit too long anymore. So yeah, 30 years in July it'll be. So my background, I was a consumer lender for 9 years. I've been involved for, gosh, probably 28 of my years at the credit union in lending of some form, and I currently serve on our credit committee and our business loan review committee. So if you ever apply for a business loan at the credit union, I'll be one of the people, but only one out of a group looking at that loan together. And then Andrea Barber, who's here with me, she's our financial services manager. She's been at the credit union for 18 years, and she oversees all of our consumer lending operation there. And so as young, early startup businesses, personal credit comes into play quite a bit, because you may not have much business credit yet established, or tax returns to show your business income fully yet, things like that. And so sometimes her department touches it, and our commercial loan manager, I wanted to have him come too, but he's on vacation this week, so go figure.
Of course.
He wanted to be in Florida instead of Michigan, I just don't understand
I
it.
think we did.
He's in for a shot when he gets back.
Yes, it'll be a weather change for sure. So let's take a minute and if you wouldn't mind, just tell me your name and what type of business you have started or would like to start. And then maybe something, if you have something specific you'd like to get out of the session, I'm going to make notes of those up here on the board.
I'm Dennis. I've begun the process of starting a company called Unique Coatings. It involves sport cover, coating concrete surfaces, countertops, driveways, garage floors. There's a lot of different applications that I can do with this company, and I'm looking forward to getting going.
What about rubber roofs?
No, don't do rubber roofs.
Just thought I'd ask.
And is there anything specific you were hoping to get out of the session tonight?
As much as I can.
Just as much information as you can get, okay?
The information as much as I can as
Okay.
well. I usually have a good credit report in the sevens or above.
Mhm.
I'm Terry Bono. I do have an account at your bank. I have had mortgages through your bank,
Mhm.
paid off mortgages. So I'm in good standing with your bank. So
Wonderful,
That's a good, I've got a good history.
that's great.
And like I said, I bought a commercial property out in Wademan,
Mhm.
and right now it's just an empty shell.
Okay, and what type of commercial property or what's it geared for?
Well, what it was in the past was a bar,
Okay,
and
is that what you hope it to be again?
there's no license, so I would have to research the
Liquor license?
any kind of liquor, any kind of liquor, all kinds of liquor, to be able to put something like that in there,
Mhm.
or a restaurant, or anything of that nature.
Mhm. So
I
you're
haven't
still
really
figuring out what to
decided all
do?
total yet.
Okay,
It's going to be a venture.
takes a lot of thought. The more thought you put into it at the front end, I guess the better it goes for you with the
That's
business,
why
right?
I'm here.
Yeah. All right, we'll go back here.
My name is Carlene. I started Central Escapes it's an escape room. We're here in Mount Pleasant.
Will you just explain what an escape room is for those of us that don't know?
For those of you that haven't heard before, you get locked into a room for an hour. You have to use teamwork, cohesion,
To get out.
communication back and forth. to
I
get
have
out.
seen something, I think, on Facebook about this actually.
Yeah,
but yeah.
solve a bunch of clues. You solve a clue to get to the next clue, and eventually work your way out of the room.
And do you do corporate events?
We do. We do corporate tourists, corporate events, tourists, college, small groups, church groups.
Very nice.
A lot of the different.
Oh, that's a fun idea. What are you hoping to get out of the session tonight?
As much as I can.
Okay, so no specific burning questions?
No, not at
Okay,
this point.
great.
Name's Travis, starting an e-commerce business,
Okay.
drop shipping in particular.
All right,
Hope to learn how to build credit for a small business.
okay, good. That's definitely something we'll be addressing. I'm just gonna write Biz over here. All right.
My name is Doug Maxon. I just opened up a barbecue concession trailer for catering, concessions, roadside events, Maxon's Blue Country Barbecue. We just got licensed in September and then got it shut down for the winter, basically. So we're still doing some events,
Yeah.
some catering stuff over the winter, but not near
Right.
as much as we will
Over the
in the
summer.
summertime. But
Yeah, you can be planning booking all your events all winter, right?
trying
For
to.
summer?
Yeah, we're definitely trying to, and I'm just kind of the same thing, just hoping to learn how to build my credit. It took me a long time to get started because I kind of paid as I went rather than
Mhm.
getting credit for my business. I did open up a business account at ICCU
Woohoo!
for the business, so I've got that going, but it's kind of the same thing, just kind of how credit will help me like in the future to get going.
Mm-hmm,
I'm trying to do it all without credit because I don't want to have that overhead every month, but
right.
you never know what's going to happen. As
Yeah,
time
you're still
goes
gonna
on.
have some suppliers and vendors, so you're gonna learn tonight there's some things you can do to help establish business credit. that works a little differently than on the consumer side perhaps, so.
Okay.
My name is Mo Gibnat, and my wife and I are starting a business where we sell handmade products from Egypt
Okay,
online.
very nice. What types of products do you make?
Home decoration mainly.
Mm-hmm.
Yeah.
Very cool. And have you already started your operations, or do you have your website yet?
Not yet. We we have a website now, but I mean the inventory is in the forming. for the time being.
Okay.
Yeah.
So you haven't really hung out your shingle quite yet.
Yeah, our
Aggressively.
first shipment of inventory arrived last week.
Okay.
Yeah. So now we can actually really get started.
Well, that's exciting.
Yeah.
Yeah, congratulations.
Thank you.
All right, and what would you like to get out of this evening's session on credit reporting?
To me, is as much as I can.
Just as much as you can learn. All right, very good.
Hi, I'm Mindy Simon. I have not opened my business yet, but it is a cottage food business selling cookies, High Five cookies, and hopefully open this winter. And I'm also here to learn how to build credit for
Okay.
my business.
All right, so we'll definitely have to be spending some time on that, right? How to build credit for a small business, so that's good. Just so you're aware, a couple of you did mention your members at the credit union, and so, which means you're an owner of the credit union, so that's pretty exciting. But we did bring some information on our commercial accounts and a couple of business cards that might be helpful, and also who we often will refer members to for some startup financing, but I know they have wonderful consulting services here with the Small Business Development Center too, to help direct you on the right path for startup financing. And some of our startup financing and some of the loans we make for small business owners before they've established business credit is based on their personal credit line. If they need a vehicle, a truck for their business or something like that, Andrea's department will often handle that. So we can talk about that and answer some questions on that too tonight if we need to. So let's see where we go next. All right, these are our objectives for this evening. This is what we're hoping that you will get out of this. So you're going to walk away hopefully knowing more than when you came in the door. And we'd like you to be able to explain the concept of credit reporting and how it might impact the operation of your and growth of your small business. Whoops. And identify credit reports and other systems commonly used to assess risk with extending credit to businesses. And explain how these credit reports work. Well, goodness. I should have plugged in my own clicker, I think. Identify the benefits of small business might derive from a positive credit of managing its debts and obligations. One of the most important things you can do is just pay things on time and then make sure they're reported. And then identify risks to a business from credit-related scams or frauds. You might have to worry about that as you're dealing with, especially with the online businesses. Is that really that person, and is that really their credit card? You might end up with some situations where you're accepting credit cards where you have to deal with disputes and fraud claims, okay? Yeah, I am gonna take a minute and see. Can I plug into the USB there?
Let me go see if we have a different filter for you.
Okay, or the battery might just be dead, I don't know.
Okay.
It's not working real well. In the meantime, we'll do it the old-fashioned way, right? All right, and then we want to be able to identify the common practices available for a small business to help in proper credit reporting, and some of the services available to you, strategies to build or improve credit, which clearly is a need tonight, and explain how the personal finances of a business owner can impact the business's ability to get credit. That will also be of key importance to you this evening. Okay, and then we've kind of already talked about what you'd like to learn. So those are what we're hoping will be your takeaways from this evening. So credit reporting provides information. There's a lot of different providers into a business credit report. So initially here, credit reporting, there's two types, business and consumer, right? Commercial or consumer. And provides information by banks. Andrew, which one to be in my clicker? I'll let you know when, I don't need it just yet, but it provides information by banks, lenders, investors, landlords, businesses, all kinds of people contribute to a business credit report, okay? And it helps people analyze your credit worthiness and whether you're good for insurance underwriting, employment background checks, things like that are part of the credit reporting process. And that's a service you can potentially obtain. Certain licenses, continued credit terms, you got a line of credit, can you keep it? It depends on some of the things and trends maybe that your person extending that, whether it be a supplier or a vendor or a creditor like a bank or a credit union, whether you can keep those, and then the needs of your business at the time. So all of those things come into play. And I've skipped way ahead. Next one, please. All right, so credit report has impact 3 different ways. You can either be a borrower seeking credit, I need a loan, right? And you might have to apply. You could be a report user. So some of the, how many of you plan to offer some type part of your business might be business to business? Yours, I assume you were the one that came to mind, yeah. So you may want to utilize business credit reports as you're assessing, am I gonna make this guy pay up front? Am I gonna let him do net 15, net 30? And do I want him to put 10% down, 50% down, on this project? So those types of things, that's how that can come into play. Or if you're going to partner with somebody to be able to offer credit, maybe your store is gonna have its own, or your website, its own gift card with points or something like that, then you might become a report user. Or for collections, so there's different, now I'm getting into the reporter of information, I guess I should drop down there. So reporter of information, so where I work, clearly we're a reporter of information and a user. We're generally not a borrower. We could be, we have some lines of credit to make sure we have liquidity. Sorry, it's drying here as I keep talking, but to make sure we have liquidity to run our business, we could borrow if we needed to. We try to manage that without needing to borrow and are pretty successful at that, so we very rarely do, but we typically borrow 1 time a year because we're required by our examiners to test our lines of credit, and that's pretty much what we do. But we certainly use reports a lot. I don't know, how many we pull in any given day, but anytime somebody applies for a loan with us, we pull a credit report. That's a permissible use. You're going to hear me talk about that a little later on. Can't use it for other things. I can't, if they're also going to be your customer, I can't talk to you about their credit worthiness, of course. We can only use it for our permissible use, and then we have to keep it private. So we're definitely a report user. And then we're a reporter of information. So we report to the various credit reporting agencies about how our members do with loans. So when Terry said he does a great job paying back loans at the credit union, that shows on his credit report. All right. And so we're going to start with business credit reports. So businesses that participate with credit reporting are more visible than the ones that don't. And so participation in business credit reporting can increase your marketability as a business. And accounts you have established can be monitored and controlled, or accounts that you establish for people. And then data can be used, of course, to obtain business credit. So suppliers, shipping companies, things like that, like to review the history of your payments and things. One of the #1 things you can do, whether it's on the business side or the consumer side, to have positive business credit is pay your stuff on time. Be reliable. They can count on you to pay what you owe, then you're going to have positive credit. That's like the #1 thing. There's going to be some other things you'll learn tonight, but that's really key, is making sure you're organized and stay on top of that. I mean, sometimes things, frankly, don't get paid because people are just unorganized. It's not because they don't have the money. That's a little more understandable, that if they don't have the money. We like better when they're earning enough money to make their payments, but sometimes it's just because they're not organized. And you can work with your creditor for solutions for that. There's ways to automate things to make it easier to happen so that you don't miss out on some of those things. So make sure you do stay organized. So let's talk about how you're going to get started. Go to the next one, please. So first of all, you're going to obtain a tax ID number for your business. How many of you have done that already? Okay. So you're going to use this for a lot of things. Business credit's just one of them. So it's going to go for business credit. You're also going to need, unless you're a sole proprietor and don't have any employees, you're going to need a tax ID number for your tax reporting. And you're going to need a tax ID number when you come to the credit union to open up a business account with us. So, like I said, the exception to that is the sole proprietor with no employees. But you may want to grow someday into a sole proprietor with employees, or you might want to change your business structure. So sometimes the tax ID is warranted anyway. It depends how you want to run your finances, and of course then you want to consult your accountant or your attorney about that. But that's the place to start. It's called an EIN, Employer Identification Number. And if you need information on how to get started, I'm sure they have it here, and if not, you can give me a call at the credit union, pick up my card. We've got information at the credit union on how to sign up for an EIN number. It's pretty easy. You can do it online or over the telephone and have it.
It takes seconds.
Almost right away, yeah. So it's pretty easy. And then the next thing you're going to need is a DUNS number. And DUNS stands for Data Universal Numbering System. It was established by Dun & Bradstreet, who is one of the primary business credit reporting agencies in the country. Okay, there's like 3 national credit reporting agencies. Dun & Bradstreet's one of them. And the other 2 you may have heard of, Experian, and most recently, I'm sure you've heard of Equifax. Okay, why have you heard of Equifax? Anybody know?
They lost a bunch of information.
They did. They had a breach over the summer that got reported this fall, and that impacted like 143 million people whose information was at risk. And does a credit reporting agency have a lot of, this was on the consumer side, a lot of information on a person? You bet they do. There's things you can do about that, so if you have questions, we can talk about that, certainly, too, to protect yourself. But yeah, so the DUNS number is something that you will need. And then once you have a DUNS number, then you're going to choose a reporting service that meets your needs and budget. And it's like anything else when you're running a business. You want to assess the cost and the value you get for that cost. And so those 3 are the main competitors, so you're going to want to pick amongst those 3, but you probably want to compare the 3 and see who you like best.
How do you get a DUNS number?
You go to, and I believe this is in your participant book, but if not, it's www.dnb.com. And at that website is where you register for your DUNS number. Good question, thank you.
Those are pretty fascinating.
Yeah, have you done that already? Yeah. So once you've figured out who you might want to use, you're going to take your EIN and your DUNS number, and you're going to provide your business registration information. That's probably also going to include like your business name and what type of business you are and where you're located and things like that, what you do. And then your financial statements and accounts to be included in the report. Like if you use certain suppliers and things like that, you can give them that information and they'll help track it down. And then those reports will be used to help build strengths into your business, whether it be a line of credit you're establishing or some other way. But all right.
So,
Yes.
if you don't subscribe to a reporting service, then is there no credit report of your business outfit unless you do that? Like with yourself, there is a credit report of you no matter if you subscribe to one or not, right? Like
Right.
There exists no matter-
There may or may not be. They're not going to have a number to put it under if you've never applied for a DUNS number. So it's going to be harder to identify if that's actually your business. So you could be developing like this positive credit to somebody that reports automatically and it not be doing much for you. Or there may be people that don't report automatically, and if you've gone through this process, they reach out and get the information, and so it builds some credit that it wouldn't have on its own. So that's why they recommend pursuing it. And you have a little more control over, kind of, they know who you are. The other thing to keep in mind is kind of like your consumer credit report, and we'll talk about this a little bit later. You don't go to the same place, but these 3 credit reporting agencies will provide you, I believe, once a year, a free report on your business so you can see. You can go out there and check your business do a search like you are your business or not, just to see what comes up. The difference between business and a consumer report, though, is a business report is public information more. So on the consumer end, I have to have that permissible use or reason to use it, business reason to use it, or I have to have the consumer's express written permission to use the report. On the business side, I could go out to one of these agencies, and if you have a business credit report out there in the name of your business, I can purchase one. So it's a little bit different on the business side.
Yeah, anybody can see it.
Mm-hmm. Did you have a question?
No, I just said, oh,
There's a-
wow.
Wow,
I mean,
yeah.
if somebody's getting ready to lose their business or something, you can go check it out, or, you know, whatever reason.
Right, there could be, yeah. And we'll talk about what's included in a business credit report in a little bit, but yeah, certainly payment history is public record information. Like if there's a tax lien out on your business, that would be in your business credit report, things like that. Go to the next
That
one,
would be
please.
available to, say, if you want to extend credit to somebody, you can check their credit
Mhm.
yourself.
If it's, are you talking another business?
Mhm.
Yeah, yeah. You can do that even if your business would do that to a consumer, but there's a different channel you'd go through, yeah. All right, so in your workbook you have a discussion points section where we can chat for a little bit, but what have business credit reports helped your business? Have any of you actually done anything yet with business credit reports? No?
I was asked for my business credit report, and that's how I found out I needed one.
Yeah.
Yeah.
Or sometimes a vendor or supplier will, I have this happen very rarely at the credit union because, you know, we've been around a long time and we're a financial institution, and so for the most part we don't have an issue with like vendors or suppliers worrying about if they're going to get paid. And so they just will do the net 30 or whatever, and it's no question. But every once in a while I'll get asked for a Dun & Bradstreet number for us. Yeah, it doesn't happen
Or
very
they
much.
send through, I've seen things come through on my department from my side where a vendor will do like a verification. So if your business account is with the credit union and you want to sign up with, you know, a different vendor before they accept you as their customer or client, they will send through a verification because you told them that your business account is with us, and they want to know pretty much, you know, because you don't have a business credit report. So these verifications come through and they just want to know how you handle your account. How long have you been in business? You know, what does your account look like? What's your average balance? So that's also an offsetting factor too. If you don't have the credit established, you can still obtain those relationships with vendors based on the activity that you have or your history of your business account.
So we do it the same way as those credit reporting agencies where anybody could just purchase that information from us, Andrea?
No.
No, we don't. What do they
Yeah,
have
so
to do?
like they would get your information from you to know that we're gonna be releasing that information to that company or that vendor to accept you. So you would sign like an authorization for them to send over that verification of your business account to the credit union.
Yeah, so we would want your approval as our business member that it's okay to share that information on your account history first.
So when your personal credit report gets looked at by a business, you get a letter in the mail usually from that business
If
saying
you-
that they did it, or right?
Well, no, not necessarily. Well, like, again, it has to do with a transaction normally from a business. The only way we pull your credit, like the credit union, for example, the only way we would pull your credit report without it being part of a transaction that you've requested on an application is if you like already had a service with us, such as you have a line of credit with us and we're doing our annual reviews. And so then we'll pull your credit again to look and make sure you still qualify. And then we just let it ride, unless there was something catastrophic in there that went, yeah, we better rethink this line of credit, and then we would communicate with you. You will always, every single time if you get turned down for a service on the consumer side, you will always get a written notification that a credit report that you've been, it's called an adverse action form, but that you've been denied for a service or credit, and that decision was made in whole or in part because of information received from a consumer credit report, and then it will list the credit reporting agency, and with that you can get a free copy of your credit report so you can see. It'll also list your credit score and the top few items that went into that report that were derogatory or whatever, or might have been a problem.
If
So,
somebody would buy my business credit reports, can I see that they bought it?
you know, that's a really good question. I don't know the answer to that. I would have to research that. I'm not sure that you get any kind of notification that so-and-so inquired into your credit. If you subscribe to that, certain services with them directly, I would think you'd be more likely to, but I would have to research that question. Can you jot that one down, Andrea? If you give me your information afterwards, I'll look into that for you and let you know. Yeah, so how business credit reports for us, mostly how it impacts our business at the credit union is because we're on the side of the lender. So we're looking at it from are you credit worthy standpoint if you're getting a business obligation with us, so it could be part of the package. Or like I mentioned, sometimes when we're establishing a new vendor with us and they haven't done business with us before, they may ask for it. Like if we're going to them for a product or a service, especially if it's something ongoing. Most of the small stuff we'll just put on our corporate credit card. And if they have an application process for us to have to send them a check or something, we'll just put it on our corporate credit card and call it a day if it's a one-off. But if we're establishing an ongoing relationship, then we might be game to go through the process, you know. So, what are some of the challenges with business credit reports? You mentioned one already that you've run into, right? You don't have it yet, and they're asking for it. So, as new startup businesses, how do you go about establishing credit for your business? It's going to rely pretty heavily, initially, on your personal credit picture, right? And how many of you are working other jobs besides the one you're with the business you're starting? So that may even come into play as part of your current credit picture, right? So some of the challenges with business credit reports is when you get started, you might be paying this obligation out of your business, and you might, but it might be under your personal name. And so it might not be establishing. So that's one of the challenges in getting started with business credit is that dichotomy of you kind of are forced to start on the personal side, but then how do you tie that into the business getting credit for it? And that's definitely a challenge. And then some vendors don't automatically report, and that's where it helps for you to take the reins and the initiative to help the credit reporting agency know who you do business with, so they can at least attempt to get that information. So you want a steady stream of payment history from a variety of creditors and suppliers to show on your business credit report. All right, next slide. All right, so business credit report. So business credit report includes a commercial credit risk score. So what would go into that are some of the credit history type things like transaction histories would go into that, any public records, and then demographic information about your business, like how long have you been in business, how many years have you been around, what's the size of your business, and then what type of a business is it, because certain types of businesses are more risky than other types of businesses. So I recently finished my master's degree at Northwood, and in one of my classes we were talking about, it was a finance class, and we were talking about finances and how to estimate things in good and bad economies, and he was saying, and we learned these factors that had to do with the riskiness of businesses and how much they fluctuate when the economy fluctuates. And you know, one of the most stable businesses, this shocked me, and I guess it makes sense, but I hadn't thought about it. Guess what one of the most stable businesses is in a fluctuating economy or in a down economy?
Banking.
Bars.
Beer, yeah, like beer bar, yeah, brewers and stuff like that, because people make room for that in their budget, like no matter what. It's just there, and sometimes when the economy's bad, they feel like they need it more than they did before. So it's like one of the most stable ones. That was just funny. That one's for free. And so in addition to the score, okay, so the commercial risk score differs a little from your personal score. Now your personal score is going to be a number. So that could range anywhere from 300 to 400 up to like 850 on the personal side. On the business side, it's letters. So think of it more like your grades in school, but it would go on the low end like as a D, and on the high end it would be AAA. So that's where it differs a little bit from your report card at school, is it doesn't just use one letter. So AAA is like the best. So when you see, typically where I see this is with the insurance companies somehow, but you might see them even advertise like AAA or AA. That's because they feel like they have this credit score to be proud of, and they're not a risky company, so you can count on them. It's because what is insurance for? Catastrophic events, right? And so you want to be able to count on them, and that their insurance company is not going to go belly up when you need them the most. You want them to be able to pay your claim if we have a weather incident or whatever it is around here. And so people pay attention to that, in particular with insurance companies, so they make that part of their marketing efforts sometimes. Yeah. All right, so indicators to predict the potential for business failure. So like you mentioned that, yeah, if anybody can see my credit report, or they might be able to see that my business is failing, yeah, they're gonna see trends. If it's starting to show you're having trouble with paying things, or things are starting to show up in collections or on public records, that is gonna be the type of indicators included there. Credit filings, the existence for secured property, it would show some things that you have out there that you own. So it might help with that there's assets there, and I'm going to drop down to the bottom in the public record of security interest filings. What that is that's the UCC1 type filings, or UCC being the Uniform Commercial Code. That's like the credit union files those sometimes. We're taking a security interest in your property or your whatever it is. It's no different than using your car as collateral on a car loan, which is filed through the Secretary of State. But these types of public records where there's been a lien filed against a property would tell a potential lender, yeah, somebody's already got a lien on that. I don't know if I would be able to then hold that as collateral, because if they're already out there in that first lien position and I'm in second lien position, I might be able to perfect my lien, but it might not be worth anything to me if there was a loss. And so it kind of tells them if that's the case. And then it'd have information about your business ownership and any other businesses or subsidiaries owned by the same business. That type of information would be on the business credit report. Just checking if I missed anything important. Oh, and I mentioned that each of the credit reporting agencies would give you a free business credit report. For a fee, they'll also possibly provide some additional information, like their agency summary of financial and non-financial accounts, and some of these public records and scores from other reporting agencies. And then payment trends and a payment index comparisons to your industry norm. So that's like, how do you look compared to other businesses in your same type of business sector? That would be what it would be looking for. All right. So I mentioned these three already. The D&B at the top, that's the Dun & Bradstreet, and then Experian and Equifax. Those are your three key business reporting agencies. So we're going to move on a little bit to consumer credit reporting now. And again, this part is key for you guys as you're starting in your new businesses. So consumer credit reporting agency is a person or business that assembles and evaluates credit information on consumers. And you're going to hear me mention this annual credit report as we talk about consumer reports, annualcreditreport.com, quite a bit. You need to take this away with you tonight if you haven't already. This is where you can get information on the three consumer credit reporting agencies, and this is also where you can go to get your free annual credit report each year. So you as a consumer are entitled, ever since 2005, you're entitled to one free credit report from each of the three national consumer credit reporting agencies each year. So if you split that up every 4 months, you could be checking your credit for free every 4 months, just to double check that there's not been any fraud and nothing shows up there that you didn't initiate.
And now on your personal credit report, you can actually get it all the time, right? Because there's services like Credit Karma, where every week they update you.
You can, but that's a third-party service, so
yeah, but it's free.
It is free. And so I don't think it's a bad thing. I do use it myself, actually, Credit Karma, because it will provide you notifications. But I don't recommend not doing this. You should still do this, because there can be things that could get missed with Credit Karma that aren't the same, because it's a third party out here and it's not.
And their
the key
scores are a lot
repository.
different.
Yeah, their
on the
credit
consumer
scores.
side.
Yeah.
Their scores, it's sometimes on my end, it's hard to overcome with the members sometimes, because with Credit Karma and the other ones out there, you know, you guys sometimes they'll ask you to pay for your score, or you'll look at that score and you'll be like, oh wow, I'm at a 720, that's great. And then you'll come into the credit union, and then you'll work with the loan officer, and then we go to underwrite the loan, and when we pull you, the score could be higher, but most of the time it's a lot lower. And we see normally on average about 40 to 60 points lower. And how it was always explained to me, the reason it's lower is because of the actual credit report model. There's different model numbers that different agencies or consumer places use. So like, if you're at a dealership purchasing a car, their model is different than coming to the credit union and us looking to, or for you looking to obtain credit.
Right.
So just keep that in mind too. It's a good tool, but it does
might not be the
fluctuate.
same
It may
one your
not
lender uses.
be what
The
comes
other
up.
thing to keep in mind with personal credit reports is it can change like within a couple of days or a week, because something else might have been reported. So like you'll see when we get talking about what impacts up and down your credit score, I have a handout for you on that. One of the biggest areas that's looked at is capacity. Well, okay, it's Christmas time right now, right? Where a lot of us are shopping more than we usually do the rest of the year. And so maybe my credit card balances are higher than the next time my credit companies report my balance. And that's gonna make my credit score go down probably a little bit. And so things can happen, and it all could be is you looked at Credit Karma last week and your credit card company reported your Christmas shopping next week, and then it impacts your score by the time we pull it. So some things like that. But we do recommend going out. So your credit card maintenance tools are good. I mean, it's still helpful to know if something possibly popped on your report that you didn't authorize. Beware too with those services. They're there to really market to you, so they're going to probably push, products at you. But also do this. Don't skip this because you're doing that. You should still do this once a year at least.
Personal and business.
Well, I would recommend it for business too. This is consumer we're talking about right now. So for business, you're not going to go to annualcreditreport.com. You're going to go to Dun & Bradstreet, or you're going to go to Experian, or you're going to go to Equifax directly. But for annualcreditreport.com, you'll have access to the 3 consumer reporting agencies, which Dun & Bradstreet is not on that list. They're replaced with a company called TransUnion, which is actually who we use for our consumer reports at the credit union. Now, when we do mortgages, though, we actually get a credit report that blends all 3, TransUnion, and then Experian and Equifax both still come into play on the consumer side as well. Okay, next slide, please. Before we go too far, go back for a second, sorry. One of the things I did want to mention though, as a small business, I mentioned this already once, if you have a permissible purpose to obtain a credit report on a consumer, then you can access, but you can only use it solely for that purpose intended. We'll talk in a little more detail about this in a little bit. And again, you can't pass that information along to anybody. You can only use it for that purpose, and you have confidentiality requirements there to keep the information protected. And there are some laws involved, and in this case, it's called the Fair Credit Reporting Act that we're going to talk about a little bit later, that can impact you no matter what side of credit reporting that you're on. And so that's something important to keep in mind, that you're going to have some compliance regulations around credit reporting if you get involved in the use of credit reports or in reporting to credit reporting agencies. Don't have to worry about it so much if you're just saying, hey, start a report on me, or you're a consumer. But if you're going to get involved with pulling credit reports or reporting to credit reports, then you're on the hook. Okay, so next discussion point in your books there. What are some of the reasons a business owner may have for reporting consumer credit information to a consumer credit reporting agency? What do you think?
Somebody didn't pay the bill.
Absolutely, for collection purposes. They didn't pay, and you want other people to know they didn't pay, or maybe help collect. I believe there's a slide on this, but you can either go directly, you'd have to be a pretty big business to normally go directly to the credit reporting agencies. Otherwise, you're going to go through another agency or like a regional or local agency to obtain credit information or to report. Some of those are also collection agencies, and they'll help you collect your bad debt too. Yeah, but then they'll want a fee for it, of course. And you have to be able to provide good credit or good record-keeping information. It has to be accurate what you're providing them. Or they may buy your bad debt from you if there's enough of it, but they're going to pay pennies on the dollar. Like they're not going to buy you out at 100%.
And also there's a possibility of the buyer trades like had a big order and I need to check like he's going to pay using credits. I need to check his credit record.
Right. And normally you're going to build that into your forms and stuff like that, so that you know, when they're placing their order and they're signing to say, yes, I want this order, they're signing to say that you can check, use their information from their credit report to determine their credit worthiness for their billing terms or whatever. Yeah, you're going to normally build that into your forms. So like when you sign on a loan application with the credit union, it tells you we're going to pull a credit report for, or that we're going to use information from consumer credit reporting agencies to help us in our decision-making process for the loan. Yeah. Yeah, so for reporting too, yeah, a lot of it has to do with collections and debt recovery. Also, if you're a reporter, like let's say you have people that need to make payments over time, you're establishing a relationship where they're doing that. I don't know if very many of you, it doesn't sound like will do the subscription part probably though, so I don't know how many of you this would actually apply to. But people tend to prioritize their stuff they know gets reported to a credit reporting agency first. So I gotta pay the credit union and I gotta pay Aunt Sally. Well, if I'm late with Aunt Sally, she'll be mad at me. But if I'm late with the credit union, it's going to go on my credit report, my score is going to go down. I'm paying the credit union. You know, people prioritize a little differently if they know you're reporting. So that's something. And you can help, you can also help your consumers when they're doing a good job paying you. It does help them when you report. And then also it can prevent a consumer from becoming overextended because like when we're looking at a loan request, for example, we'll know they also owe you money. We'll take that into consideration when we make the decision on the loan, so that also helps determine not only their ability to pay us back, but their ability to pay you back even though you're not involved in the decision, right? So it can help with that, can prevent them from becoming overextended. Another reason a business owner might have for reporting would be to prevent fraud. So if you report and then for some sad reason you were dealing with an identity thief and didn't realize it, then the real person, when they go to annualcreditreport.com or maybe they get alert from Credit Karma that this new trade line all of a sudden showed up, then they can take action about it to prevent the fraud. So those are some of the reasons that you might want to. The biggest reason small businesses do it, especially for the one-off payment types, would be for debt recovery and collections. All right, thanks, Andrea. Any other questions before we keep talking? Okay. So this does help you to manage risk. I mentioned notice of debt incurred. So it alerts other people that person does business with that they have a new debt. So like at the credit union, we do something called the debt to income ratio when we figure out if somebody has the capacity to repay a loan. A lot of places, they'll have their maximum at like 45% on the consumer side. But it really, when I say 45%, of what? Of their monthly income, okay? Usually it's like the gross monthly income. But it also depends what is their gross monthly income. You know, so a person that makes $1,000 a month and they have $550 left over to pay everything else and do everything else they need to do in life, besides what shows up on their credit report, is a lot different than the person that makes $5,000 and has like $2,750 left over to be able to do everything else. It's a whole different picture, right? So they look at their whole picture, but yeah, notice of debt incurred, you help them manage that when you're reporting. Again, we talked about credit conscious consumers are likely to pay on your accounts if they know you report. Debt recovery increases. And then the fraud or identity They can detect that there's been something wrong and put an alert out there, which is helpful. And then if you ever are dealing with pulling a credit report and you see an alert, then that's something you need to be aware of and maybe go back. That's like a red flag. Hey, I need to really double check with who I'm doing business with here to verify that person's identity, because there's a potential problem there, or their credit has been compromised before. There's times you might also see, especially after the Equifax breach, because there was a lot in the news about this, about credit freezes. Have you heard about credit freezes? So that you can put a freeze on your credit to where someone can't pull or can't do anything in regard to your credit report until, without your permission, to pull that freeze off, to lift the freeze so they can pull a report. So if you do start pulling credit reports, you could run into that, and you have to communicate with your agency about getting that, and probably your customer, about getting that freeze lifted to be able to do what you need to do. And then they can put it back on. You know, it can just be lifted for that one use and then put back on. But a lot of consumers put freezes on their account after the Equifax breach just to protect their information. All right. Reporting to credit agencies. So there's two ways. I think I might have mentioned this already, but you can either report directly to one of the three agencies, or you can go through a third party to report. But either way, you do need to be aware that when you're reporting, there's those Fair Credit Reporting Act considerations that you're going to have to be aware of, such as the permissible. You can't report things. I can't say that Terry's late on a loan payment if he's not really late on a loan payment, and if I do, he should dispute it. And then if he disputes it, I have to respond within a certain time frame, or he wins no matter what I say. So, you know, there's things like that that are protections for consumers, and that's kind of why the Fair Credit Reporting Act came out, was to protect consumers against bad practices from businesses that weren't being either weren't being honest, or they weren't reporting promptly. Like, they were reporting the person owed them money, but then when the person paid, they weren't going back and reporting that they paid, things like that.
Seems like that happens often. It's easy for them to report, you know, you're 30 days, 31 days late, but once you get that paid, it takes them forever to clear it off.
Well, and most, where you're paying a monthly payment, most just send their stuff in once a month on that, so it won't show up till the next month. Mm-hmm. But where the unpaid stuff wasn't getting reported paid often has been like some of the collection agencies and the collectors. And so stuff would show out there not paid, and maybe it's been paid. And so then you can dispute it and provide proof that you paid it, and usually it gets taken care of pretty quickly from there to fix it. So that's another reason to watch your report, right? To see if there's anything you need to dispute, even if it's not fraud. But if you're going through a third-party agency, which most small businesses do, because they're not large enough to go directly to one of the three, typically then you're hopefully getting some help with these compliance requirements and what's expected of you. They have some templates, or they may have software for you to use if you're reporting with them, things like that. So one of the things, if you wanted to be a direct reporter, is you have to have a retail location. And for a retail location to qualify, it gets inspected, and it has to be a location with secured locks, and it has to be a separate office, has to have separate offices with secured files, and there has to be pretty robust data protection. Like, so your computers are secure, and your physical security is in place, and so it's not likely that that information could get compromised. So they have some pretty tight standards on who they'll want to do business with directly, because there's just a lot of information at risk. And so, a little snarky here, but Equifax should have followed some of their own rules, right? And maybe that wouldn't have happened. But in all fairness, it's really tough nowadays with the cybersecurity is a whole big thing in our field. We're working very, very hard at that to make sure information is protected. And I know most other reputable companies are doing the same. So yeah, so those are some of the things. Go to the next one, please. And so in addition to the secure location and practices, to report directly, they typically want to see a minimum number of accounts that you're reporting monthly. You have to be kind of a larger reporter to do it directly yourself. Otherwise, you need to go through that third party. And then you might have software purchases for reporting and handling disputes. In our case, you know, we do that by software, both the disputes and the reporting. Two different softwares though. We use something called eOscar for the disputes, but then our core data processing system, because they work with all credit unions that all need to report to the credit reporting agencies, their software is designed to handle that job as well. Okay. And then, yeah, so you might have to purchase software and have accurate record keeping, and then there's separate setup fees to be able to pull credit, so it's two different sides of the coin, right? Reporting versus pulling. So there's two different business relationships with that credit reporting agency and training. So that part's not going to apply to most of you. Go to the next one, please. Local or regional agency, this would probably more apply to you. And we used to have one right here in town, and they're not here anymore. They're in Saginaw, called CBC Credit Services. They used to be right downtown on Main Street. I don't remember when they moved. Do you remember?
Oh, it's been a while.
It's been a little while, you know, but they're in Saginaw and down in now. And then there's another one called Michigan Credit Services. There's probably some other ones out there. Those are the two I'm familiar with. But they'll do things like, and again, with anything in business, you comparison shop, right? Or anything in life, if you're tight, or sometimes your comparison shop is what's fastest, right? I have to use that one occasionally, but not for big ticket items. Anyway, know what things are going to cost you and what you're going to have to pay. So compare a couple agencies and see who can do the best for you for your money, most bang for your buck. But also, who has the services you want and need, because different agencies may provide different services. So, for example, I know one of the things CBC does, they do collections. I know they'll provide, like if you were a landlord and you you own a couple houses or you own an apartment complex and you need to do reports for people that want to lease or rent from you. They'll do credit reports for that reason, you know. Michigan Credit Services appears to have a little more broad base of the services, so they do a little bit more than it appears CBC does, at least according to their website. So those are kind of the things you want to compare. But that's what most smaller businesses will use. And then they're going to help you, again, with the compliance requirements for training and stuff, and for that FACRA compliance for the Fair Credit Reporting Act. And then the agency's obligation is to be knowledgeable and up to date on those things and to help you with that. But that's one of the questions you want to ask them when you comparison shop is, like, what kind of training would you help provide for my team, and how do you help us stay in compliance, you know, with these things? Okay. So some of the other things you can do through a regional agency is like the pre-screening or the employment credit reports, which incidentally, if you ever have an employer pull one for you, does not impact your credit score like an inquiry does. Okay. And changes of address and contact information, that's helpful. So as you're reporting and things, and collection services to help you take legal action to recover debts or to buy bad debt from you. Okay. Questions so far?
What's the cost to pull a credit report?
Well, that's a good question. We do a higher volume, so our cost is probably a little lower. Do you know what we're paying? I feel like it's a couple bucks for an individual, and it's a little bit more, but not double for a joint, like a husband and wife, for example. The mortgage credit reports are a little more. They're like $15 for a mortgage credit report. But then that's a combo report with all 3 credit reporting agencies blended, and then 3 different credit scores, one from each agency based on their model. So that one's a little bit more in depth. So I don't know, I would guess you would probably pay somewhere between $2 and $5 for a credit report.
Okay.
One of the other things you can do through agencies, if you're trying to market and build who you're doing business with, is you can get mailing lists from them sometimes, you know. They can sometimes be pretty specific mailing lists. I want people within a 5-mile radius of my location. I want people within a 5-mile radius of my location that have a minimum credit score of 640. whatever, you know, you can have usually some. My target market is women between the ages of 25 and 50. You know, you can probably get a list like that. And then lower risks for fraudulent accounts. Again, it can help identify fraud through the credit reporting process. So it can help lower your risk working with an agency. And then, again, it can lower your compliance risk because they're experts and can help you with that and with training your staff and making sure you're using the right forms, or that you have a form for something you're supposed to have a form for, and you're collecting signatures when you should be, and that sort of thing. Okay, and then same with the fair, that's okay. There's the Fair Credit Reporting Act and there's the Fair Credit Billing Act, so we're also going to be talking about that tonight when you're a biller. So what is FACRA? What is the Fair Credit Reporting Act? It defines how consumer credit reporting is supposed to go. It provides some consumer protections. It defines business purposes for the use of credit reports. When can you use one? And then addresses consumer authorizations to use your report. Can you go to the next one, please? And then, yeah, so there would be fraud alerts that come into play. There's legal aspects of all parts of the credit reporting process. And again, so the annualcreditreport.com, that's where you know if you'd had something and needed to put a fraud alert, or if you pull a report and see a fraud alert. The Act covers disputes and the dispute process and how that works. Identity theft, so there's specific ID, like for us as a financial institution, we have this whole identity theft red flags compliance program to help spot, identify, and prevent identity theft, and then what to deal with it if it happens in our dealings with our members. And then the access to free credit reports, that's why we can pull the free credit reports through annualcreditreport.com, is because they updated this act to say that every consumer should be entitled from each agency to a free report every year. And then that you have to have established policies and procedures, and they limit how you use the report, so you can't just use it for whatever you want to, or to stalk somebody or whatever, you know. Anything you want to add, Andrea?
Nope.
Okay. So use of credit scores, that's just part of how you can use a credit report, but how are credit scores used today? Anybody have a thought on that?
Loan applications, mortgages, or anything?
Yeah, so what does the score do for you? What does it do for you to have a good credit score versus a...
Better the score, the lower interest rate you're going to pay.
Yes, you get better terms if you have a better score, yes. So lower rate. Maybe you don't have to make as big of a down payment as somebody else does. You know, if you have a lower score, I might want you to put 20% down on that vehicle, and I might let him do it at 100% because he's got a really high score and I don't feel like I'm taking a lot of risk. So basically, the credit score is used as an objective way to kind of measure risk.
Makes your life easier.
It does make life easier, but it's also not subjective. It's not like, oh, he's a really nice guy, so I'm going to give him the good rate. I don't really like Terry, so Terry's going to have to pay an extra %, you know? I mean, it takes the subjectivity out of it, which is important, because we need to treat people equitably, right? And so credit scores allow us to be able to do that. Yeah. So you might not like the model, but it kind of washes everybody through the same system at least. And then it allows people to complain. So if you as a business don't use credit reporting properly, either you report badly or you pull a report and they think you didn't use it for a permissible reason or you didn't have their permission to pull that report, they can make a complaint, and they file their complaint with the Federal Trade Commission, and then that can put your business at risk, both reputationally and then also for fines and or imprisonment up to 2 years, okay? So, I mean, they take this thing pretty seriously. There can also be civil liability for negligence. You weren't protecting their information well. And then there's responsibilities are outlined for those that furnish the information as well. Next slide, please. So, how do you think the Fair Credit Reporting Act is going to impact your business?
Has a great impact because it regulates and defines, the policies and how, at the end, how am I going to get the loan for my business?
Right.
It's the act, like this was the framework for that.
Mm-hmm. And also what you can report for your consumers, right? Maybe how you do record keeping for your bad debts to be able to report them. It could impact you, how else? Anybody else have any other thoughts?
When you get your loans, say if you get a small business loan, what's your interest rate's gonna be?
Yeah, but this is more on consumer side.
Okay.
So this is more you as the business, how you use credit reports and how you report for credit reports. As a consumer, you don't have to worry too much about the Fair Credit Reporting Act, other than if you think somebody's doing something wrong and you want to report them. Because the protections are all on your side as the consumer.
Also,
as the business,
as a business owner, it helps you mitigate risk and fraud.
yes, it does. And it also creates some additional risk, right, because of the compliance requirements. So you would just need to be knowledgeable, make sure you're doing things right. So it doesn't have to be a deal breaker, because there are some really good benefits, right? But you do want to make sure you're doing things right. So how it can impact your business is you need to get your policies and procedures in order, right, in regard to your permissible use of how you're going to use it. As a business, if you ever turn somebody down for something because of a credit report, you have to provide them that written adverse action form. So that would be an impact to your policies and procedures. And then the risk of non-compliance, like we talked about, where you could have fines or imprisonment if you don't comply and someone discovers that and challenges you. So what are some permitted purposes? I've used that word a lot. You have to have a permissible reason, right? So what are some of the permissible reasons? What do you think? I got a little list I wrote down, but any ideas?
If somebody applies for credit or loan from you?
Yes, they apply. Yeah, it's part of a transaction they're applying for. Absolutely permissible. What else? Where else do you see credit used?
Like I said, if they place a big order and they're going to pay that through their credit.
Right, that could be a permissible use. And again, you're probably going to get their explicit written agreement on your order form to be able to do that, right? How about insurance? Have you noticed insurance rates even nowadays? So it's not just your interest rate on your car loan. It's also your how much you got to pay for the insurance that's impacted by your credit score. But yeah, permissible use would be for an insurance application. So anytime you have written permission from the consumer. The employment ones you can do, like you want to hire somebody new for your business and you want to do an employee background check, you can do that, but you have to have their written permission to do that. You can't just do that because you want to and you want to hire them. You have to have forms. It's like every time I think I want to hire, so I've interviewed somebody, I like them, I think I want to hire them, I have forms I have to have them sign so we check their credit, we do a criminal background check, for them to be able to work at the credit union, check references, things like that. But yeah, you have to get their written permission. Consumer account reviews. So you've already established this line of credit for them, or maybe in your business, you've given them, they can have up to X amount in merchandise or inventory or whatever that you're supplying for them. Yeah, you can do those reviews as well. So mostly it's connected to a business transaction. So let's switch to the Fair Credit Billing Act. I'm not going to spend a ton of time on this because we're already at 10 after 7. And I want to be respectful of your time, make sure you have opportunity to ask questions or talk about other things if you want to. But this is for billing practices and errors, and it's mostly surrounding open-ended line of credit, like lines of credit, like credit cards, for example. So if you're going to, like I mentioned, have a credit, maybe you're going to work with an issuer to have a credit card for your business where they can earn points or something like that, then this might impact you that way. Mostly it's going to be on the issuer though. And so the Fair Credit Billing Act has to do with billing practices and errors. That's always the issuer. So like whoever's driving that line of credit, in our case, like if it's our Visa, it's the credit union's Visa, it's us. Then the payments that we're crediting accounts promptly. When people make payments, there's rules about how fast we have to post those payments to their account. We can't just hold the payment and then, oh, now they're at the point where they have to pay me more, so I'm going to post it now. You can't do that. You got to post them promptly. And returns and offsets, which also need to be posted promptly. And then there's also dispute considerations that come into play there. So again, this is a consumer protection thing that's part of Truth in Lending that the government put in place to protect consumers on the credit card side. And so where this is going to come into play for you guys, we brought a little bit of information like on our Square, which is merchant services. This allows you to be able to accept credit cards. How many of you know that a lot of people don't carry cash anymore? How many of you are one of those people? Yeah, it's so much easier to play with plastic and you get better record keeping and there's all kinds of things involved. Now, what are the considerations for you as a business with accepting credit cards?
There's a fee.
There's a fee, right, it's not free. So if you charge me $10 for something and I pay you $10 for credit through a credit card, did you actually get $10? No. How much did you actually get? I don't know, the fee's like 2.5% or something normally. So you didn't quite get $10. All right? You got, what, 97.5 cents on the dollar or something like that. Yeah, so you might want to adjust your prices accordingly, because are you going to say, no, I don't want to take credit cards? I remember years ago we laughed because McDonald's started taking credit cards. So you could pay with credit card at the drive-thru. Why do you think they did that?
People weren't carrying cash anymore.
Yeah, it's not just that actually, but that's part of it. I'm sure that's the underlying reason. They discovered people would spend 30% more if they paid with plastic than if they paid with cash. And so by accepting credit card, they boosted their sales, right? And so they were the first one of the fast food places to do it. And all of them do it now. Is there a fast food place you can't pay with a credit card? Not one I'm aware of, or a debit card. So as a business owner, you probably want, especially obviously for you online merchants, in those two rows, you definitely need to be able to accept credit cards. So you want to discover, again, shop around for merchant services, but like through the credit union, we have these Square readers that you can pick up for free and get started right away. Do any of you have questions on like the EMV chips and stuff? Because like this little reader will.
What I was going to ask.
Yeah.
Does that with the chip cards? The chip cards.
They have this reader doesn't that I'm holding here, but they have readers that'll do the chip card, the contactless, the Apple Pay, all that kind of stuff, the mobile wallets. So they do have all of that, and it's pretty easy to get started and set up. And so if you're interested in that, there's some information. I don't have a ton of the actual readers with me tonight, but if you wanted to start accepting cards tomorrow, you could take one of these readers tonight, whether or not you do business with the credit union, and get started. What's the risk if you're only doing the Max Stripe, which is what this one is? Like this plugs into a cell phone, kind of how this one's designed. But they have whole point of sale systems if you are looking for that. Usually they go in conjunction with an iPad or something. But anyway, what's the risk? Well, typically for fraudulent transactions, if a transaction is disputed for fraud, like or counterfeit card type transaction, historically it has always fallen on the issuer. So if the credit union issued the card, we're the ones that get stuck holding the bag and take the loss when there's a situation like that, right? Because you as the consumer, do you have liability? Nope. Visa MasterCard rules don't let us pass that liability on to you. We take it. And why do they do that? Because they want confidence in people using their cards. So the United States was about the last ones of all the countries, developed countries in the world, to get on these EMV chips. EMV stands for Euro MasterCard Visa. So this was a thing they all developed together to combat counterfeit card fraud. If your cards were compromised, people would make fake cards with those numbers. So when you'd hear those breaches about Target or Home Depot or wherever, I'm just talking about the public ones, but there's been tons of other ones, trust me. Yeah, and those get used, then we would get stuck holding the bag. So at some point it was like, okay, the merchants have to share in this, and we need to do something to combat this. And so if we do these chips, it's harder to duplicate a card. You can't counterfeit a card as easily. And the chip has to stay in contact with that reader throughout the transaction. So it doesn't help really with the like online shopping for the card not present type of transaction, but anytime the card is supposed to be present, it'll help. So how does the liability go now, and what is your concern as a business owner? The liability goes to whoever is the weakest link in the chain. And if all things are equal, it still goes to the issuer, okay? So if the credit union issues a MaxStripe only card and it doesn't have a chip, and you have a chip reader, and it's discovered to be a counterfeit transaction, credit union's holding the bag, right? We're the weakest link. If we issue a chip card and you only have the MaxStripe reader and you don't have a chip reader, and it's discovered to be a counterfeit card transaction, you're left holding the bag now because you're the weakest link. We had the chip card, you didn't have the chip reader. Now, third scenario, we issue the chip card, you have the chip reader. Now who holds the bag? We do. It's back to the issuer, okay? So that's where the protection is for you in having the chip readers. It's only an issue in the event of a counterfeit card, but it would protect you against loss in those situations, okay? So yeah, their website is, you have all kinds of other ones that you can get that do all that stuff.
I mean, with what I'm going to be doing, I can see taking a lot of credit cards.
Absolutely, absolutely. And they have it mobile. Like they have ones that can go with your mobile phone that will read a chip.
Yeah.
So you can do both with that much mobility. Because with what you're doing, I can see where you'd be mobile a lot too.
Oh yeah.
How does that work between the merchant and the issuer, given like a card not present transaction?
It's the issuer.
The issuer.
Mm-hmm. Yeah.
So like for online business, it'd be the issuer.
Pardon me? Yes.
Online business.
Yeah. Yeah. And now we might try to block as quickly as we can, you know, but yeah. That's why so often we'll go to the expense of replacing cards when there's been a compromise. Lately we've been going to, the last time we had a compromise, we went to blocking the signature-based transactions, which are your card not present, and requiring a PIN entry. Because the breach happened, and like we got notified of the breach, and it happened before that day, but we got the notification like that morning, and like that afternoon we were having fraud transactions coming in. And so we're like, we got to stop something right now. I mean, normally there's a breach and nothing happens right away, and sometimes not ever. We would just as a precaution replace cards. And we would let the members continue to use their cards so that they weren't inconvenienced until they got their new one, and then we would block the old one. But this one we had to act fast, so we couldn't. And then with the billing, so where the Fair Credit Billing Act is going to impact you is in returns a lot, or in disputes. So if somebody has a return, they paid you by credit card, they're returning the item to you, you've got to credit their credit card back quickly. There's a time frame involved. You can't sit on that credit back to them. If there's a dispute, it's not something, you don't think you should be returning the money or whatever, there's a dispute, they say you shouldn't have charged them, you're saying, well, yes, I should. Then there's a whole dispute process, and this Fair Credit Billing Act gives you timelines. Like a consumer has 60 days to dispute a transaction. So I decide the transaction's a problem, I'm disputing it within the 60 days. Then the creditor has 30 days to acknowledge that the dispute has happened, and it has to be resolved. And during that time when it's in dispute, I can't report them bad for not paying on it. It's in dispute. I can't say they're behind on that particular part. Now, if they're behind for other stuff that's not in dispute, I can still report that, but not that. So if you accept them, you're going to have to be involved in that dispute process. You're going to have to provide documentation, probably, of why that charge is justified, you know? And so that's going to be your part to play, and you're going to have time restrictions on when you have to do it. So I know, like we have to acknowledge within 30 days, but within 90 days it all has to be resolved. It either has to be charged back completely, or they have to have the final explanation of why it's not being charged back. All right? And so your part to play in that as the merchant is providing the documentation, proving their signature. Maybe you're providing a copy of the receipt that shows what they signed for the dang thing, you know, or, you know, that they entered their PIN number or whatever it is as part of the process.
Forgive me if I'm going off on a tangent.
No,
here,
you're
but we're
fine.
talking about
I went off on
cards,
one
and
your
it's okay,
time.
we're gonna talk about credit cards and fraud. What about in the case of bad checks? You know, what, as a business owner, somebody writes you an NSF check, and you're stuck with not only the missing funds and the NSF fee. You know, what are your options?
What are your options? There's a couple of options there. That's something that could be turned into a consumer credit reporting agency. You can also work with small claims court. Before you do either of those, I would work with the financial institution to see, because you can be sitting on that return check and you can call them periodically and see if the money is available and bring the check in.
Okay.
So that might not help if the financial institution's in California,
Okay.
but like if it's here in town and local, you can. But that's another reason why people prefer the cards over checks. A lot of businesses don't take checks anymore because they don't want to deal with the not good funds issue. And there is no float anymore nowadays with the Check 21 and things being turned into electronic checks so quickly. They clear pretty fast from people's accounts. So they don't have the 3-4 days of float time to kind of bank on where they don't really have to have the money in their account. They do have to have the money in their account now.
It's Tuesday, I need milk today, and I get paid on Friday.
Yeah.
Right.
I used to be able to do that.
Back in the day that worked, not so much anymore. Yeah, exactly. So yeah, so there's some options there. What you can't do, what I've seen in businesses, but you really can't do because you're violating that person's privacy, is tape that check up on your cash register counter and go, look at this guy didn't pay me. Yeah, that's not really right because that you're exposing all their account information and everything. So that you can't do, but there's some things you can do with the financial institution or through small claims or through a collection agency to still work on collecting those funds. And certainly working with the customer. I mean, that's the #1 place you're going to start, right? You're going to call them and go, hey, that check you wrote me didn't clear. What other form of payment can you provide me to make up for this bill, you know? And if you take credit cards, you can give them that as an option, or they can bring you cash. Or they could bring you a money order, you know, bank or credit union money order. So I would start there, and then I would go to the financial institution, and then I would go to one of those other 2 options if you were unsuccessful with the first. And of course, you have to decide how much it's for and what's it worth to you for how much effort you put in.
There's also charges on both ends for bounce checks.
There are. Yeah, you will. Terry's right. You would get a fee for those funds not being good that were deposited to your account as they pull that check back out, because we also have to pay extra fees for processing those bad
Right,
checks
exactly.
too. Yeah,
Pay somebody to do
exactly. So no, fair question. Fine, no problem. Yeah. So mostly again, it's there. So fair credit reporting, fair business. Fair credit billing we're done. So, I want to talk briefly about collecting debts when somebody's had bankruptcy. So one of the things, that's one of the things you would learn through a credit reporting situation. If they have filed for bankruptcy and you're a card issuer or they owe you debt and they've named that collection item in their bankruptcy, then you cannot collect from them anymore. Once it's been written off through bankruptcy, so once we find out if somebody takes one of our credit union loans in a bankruptcy and it's written off, we cannot call them, we can't send them statements. When they come in and want their next service, we can deny the next service, but we can't say, oh, if you'll pay this other loan over here, we'll do it. Because we can just say it's denied for this reason. Then if they offer to pay, we can say, okay, great, we can work out arrangements, but they have to initiate it. When it's been a bankruptcy, we can't initiate any collection practices. And so the same would hold true for you in the case of something that's been named in a bankruptcy. So I just wanted you to be aware of that. We talked about prompt. And then just, we've talked a little bit about this tonight, the importance of protecting people's non-public personal information. So throughout your business, just be ethical and make sure you're protecting the private information. You have practices in place to keep it confidential. So that would be, if they write you a check that has non-public personal information on. And if they give you a credit card or a debit card, that's, you need to protect those card numbers and so forth. And that involves your security practices for your computers and your physical security, like where you keep the slips. Do you lock them up? Do you leave them laying out? Can anybody get at them? Things like that. Just take those things into consideration and handle private consumer information as if it were your own, and how you want your own handled is a good rule of thumb. And investigate any disputes of inaccurate reporting promptly, and be aware of the negative publicity and the fines and what could happen there. All right, personal credit impact on business. So we're going to talk one, like Andrea mentioned, when somebody applies for credit, often we'll get for business credit, we'll get something asking them to talk about their accounts and how they handle things. So businesses will often, or lenders will often ask for permission to do that. And so that's where we talked about at the beginning how important it is to establish credit with vendors and suppliers, and so they can comment on it. Why you might want to look at a credit report too is also to check out your vendor or supplier. You're wanting to build a long-term relationship. You want to make sure you're going to be able to get what they provide for a long period of time to come. You're not going to want to go to all these marketing efforts for the specific brand of, I don't know, roof or floor stuff, not roof stuff, floor stuff. You said no on the roofs, didn't you?
Yeah.
Floor stuff, and then all of a
that
sudden.
That way when I fall down, I don't have far to fall.
Okay, fair enough. And then all of a sudden his vendor can no longer provide his product, and all of a sudden he spent all this time marketing this and it's not there. And so it is something good to do, but also for your end, obviously, to establish credit. Build credit with your local bank in the business name. If you're starting a business, start your business accounts. Don't do everything under your personal. Get going with your business name and get it out there. Do you need to talk to an attorney or talk to somebody here at Small Business about how you should structure your business if you haven't figured that out already? Sole proprietorship, you are your business, so you are liable for everything. There's some liability protections if you do. Go figure, it's called a limited liability company, which is that is the most typical thing we see at the credit union coming in nowadays, is a limited liability company, because it does limit your personal liability. You might be the sole owner of the company, or you together might be the sole owners of a company, but you can still have it as a limited liability company, or there's the corporation. Now the easiest is probably the sole proprietorship as far as paperwork goes, but it may not be the best for your situation. So do think that through. And then once you've got all your paperwork in order, file for your EIN and get your DUNS number and come see us, or come see a reputable place to get your accounts going. And then maintain your relationships, pay on time like we talked about. That'll be important. So we're going to talk, so that's on the business side. On the personal side, we're going to talk a little bit more about how your personal credit impacts your business. So we talked about the reviewing your credit report once a year and disputing stuff quickly. I'm going to pass these around. Can you just kind of take one and pass them around? I'm giving you a handout here on the ins and outs of credit scores. So if you dispute something, provide documentation. That's why it's a good idea to kind of hang on to your receipt until you have seen it post to your account to make sure. I don't know, I've heard of things happening like you're at a restaurant and they take your card with them to go check you out, and your bill says one thing and they ran it extra on somebody else's bill too, but they didn't show you that receipt. I'm not saying everybody's dishonest, but you need to keep an eye on your stuff, right? So you can protect yourself. Sometimes you can do apps, like for our debit card program, we have this app called CardNav, and when I spend with my debit card, it'll immediately show up. So I know they ran it for the right amount. Then I'm not as concerned about the receipt, but provide documentation if you need to. And then if you do have to dispute an error, so you provide the documentation to support the claim, you send it to the credit reporting agency, but also send it directly to the creditor, both. And then request that all the repositories, all 3 of those places be updated, and then request a new report to verify that it actually happened. And that's a good idea. Can you go to the next slide, please? And then improve your personal scores. And here's where we're going to kind of shift to the sheet I handed out from the slides, because I think it's a little bit better. So this is an in and out of a personal credit score, consumer credit score. So what makes up your credit score? That top part. So you can see the most heavily weighted is the payment history, and the recent history means more than the older history. 35%. 30% is capacity. How much is available? I have lines of credit that give me $40,000 available. I'm using $40,500. Okay, I don't have a lot of capacity. Maybe I only have $5,000 out. I have $35,000 of capacity. That's going to be better, right? So that's what that 30% capacity means. 15% the length of credit. So this is your older trade lines, how long you've had things out. You know, some people want to switch credit cards all the time because of those introductory rates, but then they never have any length of history with any one particular one because they keep paying it off and closing it and starting a new one. That's not real healthy for a credit score. Might be good for your introductory rate, but it's not good on your credit score. Accumulation of debt. So are you pyramiding debt? Have you gotten an unusually larger amount of debt in the last 12 to 18 months? How many inquiries are out there in your report? How much new debt have you taken on? Does it mean you should never get a loan? No, do it if you need it, but not all the time, and try not to do too many all at one time. And then the mix of credit. So installment can be sometimes better than the revolving lines of credit or a finance company. So, and then I gave you some actions there, what hurt your credit score and what will help your credit score. So the number one thing was making payments on time, right? Missing payments can really hurt your credit score. It can take up to 2 years to restore from one late payment.
If it's like 1 day late?
No, it won't get reported to your, that's a good question though, I'm glad you asked it. It won't get reported on your credit report as late until you're at least 30 days late. Typically, they report different levels of 30, 60, and 90 days late. But how long do things stay on your credit report? Do you guys know?
7 years.
7 years unless it's a bankruptcy.
Bankruptcy is 10.
And bankruptcies are 10. Good answer. Yes, you guys are so smart.
What is it? There's a code when I ran my credit report that says no knowledge or something. It's like a KN or something. It's not.
Have you seen that? I'm not recognizing that one. Once in a while, if there's no credit out there and hasn't been for a long time, like we have had people that either they've not had credit yet because they're young, or it's been a long time since they've had any credit and everything's dropped off their report, then it like won't give them any credit score because there's just not anything really there to report on. Yeah, but otherwise I'm not sure what the code you're asking about is.
I'd have to look at it. I'd have to look at my report to see what it says again.
Okay. Credit cards being maxed out can hurt your capacity. Like I said, shopping for credit, you can see where these things impact what makes up your credit score. More revolving than installment. Closing out credit cards. I had this happen to me once. I had, I like to shop on Amazon, and I'm a Kindle user and all that. So I had this like Amazon Rewards point card at one point in time. This was years ago, and I stopped using it because I had paid it off and I didn't want to use it anymore. Well, I went inactive and they had shut me down, and I had like a $20,000 line of credit with a zero balance. So that was really helpful for my capacity. I didn't want them to shut me down, but they just kind of automatically didn't renew me because I wasn't using the card, which from the lender side, I totally get it. But from the consumer side, I was bummed because my credit report did take a hit from that line of credit being closed.
But you can reopen it.
No, they would not allow me to. I called and asked them, and they would, you can reapply for a new card, but we can't reopen that line. And so that wouldn't have done me any good because it would have been a whole new trade line, and so I didn't do it. But and then what actions help help your credit score? Paying off or down credit cards, keeping them open to avoid the decrease in capacity, move revolving debt to installment, pay on time. That should probably really be number one. But that's why the on time's all in caps, I guess. Slow down on opening new accounts and keep it up for over time. So those are some things you can take with you as far as making sure your personal credit is good. So let's keep talking about, so I think we talked about all this stuff. Let's talk about personal guarantors. This will probably come into play if you want to do business loan financing in the name of your business, especially as you're just starting out, but even down the road it may, okay? So why do lenders ask for personal guarantors, and what does that do for the loan process? Do you guys know what a personal guarantor is, first of all? All right, let's talk about what a personal guarantor is. Personal guarantor is very much like a cosigner on a consumer loan. So I have my kid, he just turned 18, we want to get him started with credit, he's never had anything before, he's been saving up money for a car, he's got part of it but not all of it, we need to get a loan. As his parent, I may agree to co-sign that loan. What does that mean? That means if my son chooses not to pay for it, Mom has committed that I am on the hook for that, and I will let the credit union have my money instead because he didn't keep his obligation, right? So I'm guaranteeing that loan of my son's because he doesn't have enough credit for them to make the decision to loan to him, for example. Personal guarantor is very similar. It's not always for the same reason because there's no credit, but it is a guarantee to the lender that if this business is not able to make the payment, this person who I've reviewed their credit and they look pretty good has said they're going to do it. Okay, so there's some pros and cons to that we're going to talk about. But that's basically what a personal guarantor is. All right, and it indicates your support of the business to the lender. So it tells us, if you're coming to see us for the loan, it tells us as the lender that I'm behind this, I'm willing to put my money where my mouth is, basically, to support this business venture. And it may help you to establish business credit where they wouldn't have been willing to do it without the personal guarantee. It may help you then ease and get your startup or your cash flow going, providing the personal guarantee. And it may give you better loan terms. So like even when you're not a brand, I mean, it's really important for you as just startup type businesses, but even down the road when you're a more established business, it can still help you get better loan terms or sometimes make the difference in you being able to get the loan. What do I mean by better loan terms?
Better interest rates.
Could be interest rates. What else might I mean?
The length of the loan.
The length of the loan. What else might I mean?
The amount.
The dollar amount I'm willing to loan you, or how much I'm going to require you to put down, like if you're, say, purchasing a building or something like that, you know? Okay, well, you know, this person's a little stronger, so maybe they only need, I don't know, 20% or 30% down. This one I need more. Those types of things. So all of those things can be considered terms that can be negotiated, right, in the loan process. So what are some disadvantages? Well, you're putting your personal money up for, right, a business obligation. Actually, go back to the last slide for just a second before we get going too far on the negatives. One other thing I did want to mention, like it's not unusual for a husband and wife to be to guarantee something together, or especially if there was more income required, maybe the one party, doesn't have enough income by themselves and this other person adds strength to the loan application. It may not always be a spouse, and typically the personal guarantee will apply if you own more than 20% of a business is when they'll look at it. So. Doesn't apply too often, like with corporations, for example. Where am I seeing them not use them so much anymore? Churches, they don't use them so much anymore for churches. But like I remember back in the day, my husband's dad being a personal guarantee for a church loan. He was a member of the church, an elder at the church, and he had to sign his personal life away, you know, basically. So I did want to mention that about spouses or second people. There can be more than one, but it's also like with a cosigner, who's willing to do that, right? Mm-hmm. So probably your spouse is more likely to be willing to do that and support that venture than oh, my buddy Joe, who I go to the bar with or whatever, he may not be as willing to do that. I don't know. It depends when you ask him, I guess, right?
Before or after?
1, 4, 5.
Yeah. All right, now we can go to the disadvantages. So, yeah, you would be required to make the payments if the business defaults. And so it could also put your personal assets at risk. So you have something in your name, you're the personal guarantee. What do you have in your name? Think about the things you have in your name. Now I've got my house, I've got my cars, I've got money in an account somewhere. Those are all assets in your personal name if you're a personal guarantor. And maybe you had a great idea for a business and there was nobody like that in the mid-Michigan area and it was perfect and you've been going gangbusters, so you decided to get a new building so you could expand and you're just going and blowing, things are going great, and now all of a sudden in this niche market, 2 other competitors come into play, undercut your prices and take your market share away. And you've got this new building to pay for, so you don't want to lower your prices too much because you got to make payments and it impacts. Or the economy takes a downturn and the type of item you sell is more of a want than a need.
It's not beer.
That can, yeah, it's not beer. It's not as stable of a thing. That can impact you. And so that's something to take into consideration when you're offering to serve as a personal guarantor. So there's the trade-offs. You know, if you believe in the idea and you need to get it off the ground, you might have to do it. But be aware of the disadvantages. So you could risk losing personal assets over it. And like we mentioned, the spouse might be needing to sign. I was thinking that went with the other slide, sorry, I should have switched it. And then there could be some other implications with partnerships or other styles of ownership. Maybe one partner has a lot more personal assets than the other partner, or things like that. So they may even own the business equitably, but it doesn't impact them equitably if something went south, you know. All right, so let's talk about this. So what do you think after our discussion?
The risks involved.
Yeah.
Yeah, there's high risk on whatever venture you're doing.
There is.
On you.
It's risky starting a business, isn't
You
it?
have to really
Actually, we should give you guys all a round of applause because you're brave. It's a scary thing to start a business and to have an idea and put the work and sweat equity into it to make it into something. And there's not a lot of people that are willing to take those chances, but they can really pay off too. And it can be very rewarding. So I commend you for being willing to be brave and explore that. And then you're here learning so that you make sure you do things right. And so that's great. But definitely some of the challenges of being a guarantor. What could some of the other challenges be? What if your credit's not so good?
They might not still do it.
Right, you might not, that might not help your loan application, right? If your credit's strong, it'll help your loan application. If your credit's not, it might hurt your loan application. But certainly it's the personal liability, right? That's the #1 biggest thing. Mm-hmm. Would you agree? Yeah. Yeah. All right, what do we have next? Oh, we're almost done. You guys have been great. So the new small business owner, your personal credit really is the foundation for building your business credit as a new business owner. And Ben Franklin said, remember that credit is money. That really is true, because if you have the credit, you can spend it to do what you need to do, whether it's getting your first set of inventory, or it's you know, getting a building, getting your truck for your barbecue, you know, buying the supplies you need, or the equipment you need to be able to run your business. Next slide, please. So the top 5 key points to remember. So the people that put this curriculum together want you to know what is on your personal credit report by ordering a free credit report at, where do you go?
Annual credit report.
Annualcreditreport.com. You get the gold star for the day. They want you to establish a credit history for your small business, right? So what are some of the things involved with doing that we talked about?
Tax ID.
Tax ID number, EIN, right. What? Dunn's number, right? At, what was it, dnb.com? Yep, Dun & Bradstreet. Yep. And then looking at the different credit reporting agencies, seeing which one you think you want to get started with, and providing them financial, registering your business, providing them with some of the financial statements and some of the things that are going to help build your credit profile, right? So help them get started Talk to them about who you're using for vendors and what you're doing. All right, and then request a copy. Once you kind of get all this going, give them a couple months to get some things going, and then I'd ask for a copy and see what you got started. And then you can do that once a year. Next slide, please. Consider being a reporter and providing the timely information to the credit agencies on how customers repay their debts. What are some of the benefits of that again? Remember? I know we covered a lot of ground tonight.
Your customers would be more likely to pay you.
Yes, they're more likely to pay. What else? It'll help you collect if they didn't, right? And help with providing good addresses and up-to-date information, helping detect fraud, all those things. Be aware of and follow laws and industry standards relating to credit reports to avoid costly fines or legal judgments, and that's where all the talk in your guide about the Fair Credit Reporting Act and the Fair Credit Billing Act come into play. So, what final questions do you have for me or for Andrea? I did such a great job. You got this? Or I overwhelmed you and you're like, oh my gosh, I can't even think of anything I would want to know. I don't want to know anymore. I just wanted to shut up and go home.
No, I guess I asked all the questions.
Okay, very good. All right, who is game to share something you learned? What's something you learned tonight that you maybe didn't know before?
Quite a bit.
Join some of the
Yeah.
credit unions, or not the credit union, but the credit reporting companies can allow you to do that.
Okay,
Also,
yeah, it's a little different on the business side, yeah.
How the credit score is made.
How the credit score is calculated. Yeah. So SBDC will talk to you about how to evaluate the training, so we're not going to spend any time on that, so if you can go to the next one. So in conclusion, this is what you learned about, right? The differences between the different types of reports, the purpose of it, and the different types of reporting. And kind of, you would probably work through a local or regional agency to do the credit reporting and not directly with, if you're going to report on the consumer side. And then you would work with like Dun & Bradstreet or Experian or Equifax to get started on your business profile. Next. You learn about the benefits, risks, and responsibilities of credit reporting, the effect personal credit can have on your business. We talked about that, right? And how to be a better applicant and improve your own credit. And that's where this handout can help you on the consumer side. And then what we talked about starting your business credit profile can help you on the other side. And that is it. So thank you so much.
Thank you.
So I did bring some information here.